Hi everyone, this is Rob Roy with Elliott Wave Options, and welcome to TradeFinder Live. This happens to be your first visit with us at TradeFinder. Welcome. If you've been here before, you know how this works, but for those of you that are new, let me give you a couple seconds of a rundown on how this TradeFinder works. First of all, if you've seen any of our videos, you know that we have to show this wonderful disclosure/disclaimer. In all seriousness, if you haven't seen this before, please take a screenshot of it, read it in detail in your leisure. A couple of things that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, we have a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. For the rest of it, again, please take a screenshot of it, have it at your disposal, read it in detail at some time when you have nothing else to do. So the way the TradeFinder works, we'll do a brief update on the market. Not a whole lot to talk about since last week, but we will bring you up to date. Then we'll review any of our case study trade alerts that we've done for our subscribers. And then we will go through and review our recent case study considerations. Each and every week with TradeFinder, we find a case study, at least one. We've been doing some bonus work here lately where we've had a couple that we've been picking. So we've got a few to go through. So I'll talk rather quickly to get you caught up on those. We will look for a case study consideration for tonight, as we do each and every week. And then with whatever time we have left, we will do a general Q&A, which quite often amounts to you guys giving us your favorite stock symbol and us looking at our charts with what our indicators might say about your favorite symbol. So with that, that's how things work. So let's go ahead and move in, and we'll take a look at how the market is sitting right now. You can see that on the S&P, not much has happened. We're still right at this 420 level, kind of trying to inch above it, but not in a meaningful way. We had a couple dojis here within the last couple of trading days, which I thought might make things get ready to move. If you've seen our last few SPY updates, you've seen that we've been talking about pressure is building. You can see that we do have this ascending triangle pattern formation here, which is one of our breakout patterns. We use it quite often with our volatility strategy. And if you've been watching these for a while, if you've thought of subscribing, can't think of a better time to become an alert subscriber than right now, because something is getting ready to happen. And the longer we have this pressure building, the greater the explosion is going to be. I use a lot of analogies to try to help explain things from an educational standpoint. And one of the analogies that I've been using a lot, specifically with the ADX, is like a volcano, where you look and you see the mountain part of the volcano and it looks tame, interesting, beautiful, whatever. But what we don't see underneath is the lava that's gurgling and getting ready before the volcano erupts. Kind of the same thing going on in the market. You know, that steam with the lava, the hotter it gets, the greater the eruption is. So the more steam, the more power. So it's kind of a pretty similar scenario. It's a really good analogy, not just for when we talk about a low ADX rising, but with where we are and pressure building for some sort of a move in the market. The VIX is not hovering as low as you might think, closed around 1707 today. So slightly elevated considering the fact that the market hasn't done anything. But here's those dojis that I was talking about. There's one there on the 2nd of June, and then another one yesterday, and then nothing. The market hasn't moved with these dojis. So especially when we had the one on the 2nd, was just a classic, perfect doji. And for those of you that aren't candlestick people, a doji is basically where you have an open, they make a little notch to the left for the opening price, and you have your trading range, the high and the low of the day, and then you notch to the right for the closing price. And when the open price and the closing price are virtually the same with your high and low, it makes like a little plus sign or a cross. It just simply means indecision. Quite often it happens, especially in a triangle pattern, right before a breakout. Well, it hasn't broken out at this point in time. So all I can say is that, in my opinion, the longer it takes to break out, the more volatile the breakout will be. So if you visit our website, EWOtrader.com, you can take a look at the ins and outs of our volatility strategy and see the way we were able to set these up to where we can profit regardless of which way the market goes. It doesn't matter whether it breaks to the upside or the downside. We can profit in either direction. So it's a great strategy when the market is acting like this. So there really isn't much else to say with the market sitting here. I did want to bring this up, though. I know you're going to ask it at the end, so let's just go ahead and do it now and cover Bitcoin. We talked about last week how we were getting a bit of a triangle formation. Well, as you can see, maybe those that are long Bitcoin, that's not exactly what you wanted to see. So we had this movement down here to the previous 4. That's exactly what was supposed to happen. And then we had this zigzag pattern here where the market broke down, hit the 161.8% extension. All it had to do was go to 100%, but we said if it broke that, it would come down here, and did it in basically one day. And then we had this consolidating triangle formation, which is exactly what's supposed to happen after wave 5 ends and retraces the previous 4. And we have a zigzag that hits an extended level. Having a symmetrical triangle for consolidation is just spot on with Elliott Wave Fibonacci. So people quite often ask me, does Elliott Wave work with Bitcoin, cryptos? Yes, anything that has any liquidity, it works on, and it's just been scary accurate with Bitcoin. So if you're a Bitcoin fan and you're not looking at Elliott Wave on Bitcoin, you're really missing out. And so here's the thing. We had a breakout day yesterday out of the triangle, and then today you can see that we traded down, but we tested that 161.8% level and closed higher. So that's a positive, but yet it also still counts as a confirmation day on the downside breakout. So what would we be looking for now? Well, now the key is going to be, because we confirmed this downward breakout, can we break through this 161.8% fib level? That's still a primary fib level. It was still the extended level on the C wave of the zigzag pattern to the downside. So we still got to break that. It will act as a bit of support here. But if we break that, well, then you start looking at, oh man, we had a pretty good run here to the upside. There isn't really much left in the way of support on the way down. We got a gap there. We got a gap there. So we'll have to see if we come all the way down here to this 261.8% extended level. I don't think anybody long Bitcoin wants to see Bitcoin back down around the 13,000 level. So it's critical right now for those long Bitcoin that it holds right here. So we're testing that level. It could be a false breakout. We could turn, even though it was confirmed. That's a little less, a little scarier than had it just broken out and then turned and moved back to the upside. So the fact that we came back down again today leads us to really need Bitcoin to turn and rally from here. It needs to hold this, just call it roughly 31,000 level. If it doesn't, then we're probably going significantly lower. That's just what the charts are showing. I know nobody listening here wants to hear that, but that's what the charts are showing. That's what you need to be prepared for. So if we can hold the low of today and turn and head back to the upside, then we can chalk this off as a potential head fake to the downside with still a big break higher. But the next couple of trading days with Bitcoin are going to tell an awful lot. So I wanted to share that with you because there was a break from that triangle. The breakout, the triangle was just so spot on what it's supposed to do. And now to see it break down and confirm it, a little bit scary for being long Bitcoin. But again, final thought, it's got some support there. If that holds, still a possibility of a move back to the upside. You don't want to see that level broken. That's going to be the key. All right, so got those markets out of the way. Let's go back and look at some of our previous case study considerations. We'll look at Cree Research, where we went back and we looked at this on the 20th of April. So there's where we were with a a strangle. And with the market consolidating like this, you're going to see that we do have a few strangles that haven't moved yet. And that's okay. Obviously, we like it better when they move right away. They don't always do that. But usually, the longer it takes for a breakout to occur, the stronger the breakout. Kind of similar to the analogy that I was talking about with, the simmering of the lava under a volcano. The hotter it gets, the longer it simmers. Usually, the more violent the eruption is of the volcano. So kind of the same thing with these triangles. We had that false breakout. So if you want to know what it's talking about with the head fake on Bitcoin, there's a head fake for you. In this case, pardon me, it was to the upside with CRE. And then we moved lower. We got a little bit away from that 10-day moving average. As you can see, we go back and look at Bitcoin. I think you'll see a very similar circumstance there, that on the low of the day, we were getting pretty far away from that 10-day moving average, which happens to be right at the point of the triangle. So same scenario here. We were getting a little tiny bit oversold, came back up, tested the 50-day, and now heading back to the downside. If we can break 90, then we're going significantly lower on CRE, and maybe we can go ahead and close this one out. DBI, back on the 4th of May, that was in a wave 3 to the upside. Stock was trading at 1878 at the time. We did move lower, but we had a nice bounce back today. So we found a little bit of support in this area. 29% fib correction levels, not really at one of the major levels, kind of past the 23.6, but not quite to the 38.2. So that's a little bit of no man's land there. So I have to pay attention to that. Look at the moving averages, recovered back to the 10-day moving average, and the DMI is not really showing a whole lot as far as exciting things to the upside. But we did have a nice move to the upside today. So you want to see if that was on volume. It wasn't really, didn't even hit average volume. So we want to see if we can have another up day followed by some volume to see if we can continue to move to the upside. Then we looked at Love, Southwest Airlines. We have this as an alert for our subscribers at this point in time. You can see the triangle there, and false breakout to the downside, false breakout to the upside. If you've heard me talk before, you know that doesn't happen. You can get a false breakout in one direction, a head fake, but you never get two head fakes. So if it looks like a false breakout in one direction, and then it looks like a false breakout in the other direction, what that means is that you formed a larger triangle, which is exactly what happened here with Love, with Southwest. We formed a larger triangle. We got the breakout that occurred back on the 3rd, so a couple days after last week, and then Doji, a little bit of a downside, Doji again today. So it really doesn't know what it wants to do with that downward move that occurred on the 3rd. Does it want to follow through? Well, it's allowed the 10-day moving average to catch back up. We'll see if that continues to break lower. But the key thing here is the larger triangle likely means that when it does move, it will be more volatile than what was set in place initially. On the 4th of May, we looked at Darling. You can see the triangle formation there as well. Oh, nothing too surprising. Nice symmetrical triangle. Then you look to the break. There we go again, right? So what's happening here? Larger triangle. Not really surprising because of what's going on with the market, with the fact that we're in this large ascending triangle with the market itself. And there's your bigger triangle because the false breakout to the upside, false breakout to the downside. Remember, that never happens. That means you're forming a larger triangle. So again, just patience is the key. We'll wait, and normally the patience is rewarded with those larger triangles where you get a stronger, larger, and more volatile breakout move. Here we had Lear, also looking at that one on the 11th of May. And if you look here, not a whole lot has happened. Pretty much just still kind of forming the same triangle formation. Hasn't really broken out. Looked like maybe it was a bit more of an ascending triangle. Now it's kind of trying to give us a little bit more of a symmetrical triangle look, but the positive is it's still a triangle. It's still likely to move. Poly, P-O-L-Y, the new symbol for Plantronics, used to be PLT. You can see the triangle there, and then boom, had the big breakout, and we've come back. Not only have we filled the gap, but we're retracing back to the point of the breakout, which would allow you, if you didn't take the puts off to the downside, to take calls off and let the puts go back down. That's our current plan for our subscribers as well. We talk about this all the time. Gaps get filled, but we don't know when. Sometimes it's immediate. Sometimes it takes time. In addition to that, the breakout from a triangle gets retraced. Same scenario. Sometimes right away, sometimes takes a while. In this case, we had both. Had a gap down and a breakout of the triangle, both of them getting retraced. In the case of the gap, filled immediately. In the case of the triangle, retraced immediately. Doesn't always work that way, but it's kind of cool when it does. It gives you more opportunities to make adjustments. Perhaps you would have taken the put off on the move to the downside. It didn't really allow you to become profitable yet was the key. But if you did and then held the call, well, that in hindsight would have worked out well, but there was no way to know that it was going to turn around and fill the gap immediately. Could have turned and moved back to the downside. There's further support down here, which is in the 25 area, which in my opinion is where the stock will settle out at some point in the not too distant future. MGA, back on the 18th of May, we looked at this for a strangle. Again, you can see the triangular formation here, and pretty nice breakout to the upside here. So about 96, we got up as high as 103. Probably not enough to take your profit yet. We've had a retracement back down, so we're testing the breakout. If you hadn't taken it off yet, just hang in there. It's likely going to either be a false breakout and a big move lower, or it's testing the breakout move and it turns and moves back to the upside. Either one of those could very well be the scenario. Here was KBE. Remember, we had so many financials. We actually did KBE one week and XLF the next week because they were creating such great triangle patterns. That's about as nice of a ascending triangle pattern as you're ever going to see. It's just classic. It's set up great. And so when we take a look at where we go from here, and we'll just have to wait and see. That's current. That's as of today, sitting right there towards the point of that triangle. But it's going to move. That is too nice of a triangle not to. And then going back to the 25th of May, you can see SeaWorld. And we kind of actually made more of a note on the other ones, but SeaWorld was interesting since I live in Florida. And we have a SeaWorld in Orlando, another symmetrical triangle, breaking out to the upside. People coming back to the theme park. So, you know, is kind of one is for fun to look at, and yet it's making a nice breakout move, especially when the market's not doing anything. It's nice to see that occur. And that's another thing about these triangles is anything can cause them to move. A lot of people set them up around earnings reports thinking that, well, that's the only catalyst. Anything can happen. Sometimes they simply break out on no news. They just go through consolidation and then they move. And there's not necessarily a news-driven event to make a move. It's often helpful if there is a news-driven event, but it's not a requirement. And I think that's the key here. And that's what it shows you. With WBA Walgreens, you can see pretty nicely formed symmetrical triangle here as well. That one broke to the downside. And again, look what happened. Quick move lower, right back up to test the breakout. And as I just mentioned, you know, that's the rule of an Elliott Wave triangle is the breakout gets retraced. It doesn't always happen this fast. So we've got a couple examples of stocks that have retraced the breakout immediately. And it's fun to look at those, learn from them. That's not always how it works. In fact, more often than not, it takes quite a bit longer than an immediate retracement. But the bottom line here is the Elliott Wave rules are being followed. The patterns are doing exactly what they're supposed to be doing. So it's nice to see that. So looking at the XLF, again, I mentioned that we had KBE and we had the XLF as well, because there was so many stocks in these sectors that, like, well, let's just do the ETFs rather than trying to isolate or pick individual stock symbols. And a little bit of a breakout, right back to test it already. Amazing, really, to see all of these breakouts being retraced and or tested right off the bat. Not as hard to believe when you look at the market and you say that, well, market hasn't done anything, so easier to make sense of it than you would in a normal directional market condition, but still interesting nonetheless. Now, last week we looked at ASAI, and not much has happened since last week there. BTU, pretty nice move to the upside on BTU. So that's looking pretty interesting. And if we took a look at the DMI, the ADX is actually starting to climb up there. So you want to be careful. The ADX is outside the positive directional indicator. It's about 45, so it's a little bit above the 40 level. We also have BTU closing in on some resistance there at the previous wave 3 high. So caution's warranted here on that nice breakout move to see if it's able to break above that wave 3. So if you followed this one, if you're long, think that you'd want to give it a chance to see if it can break that level. And if not, then maybe go ahead and take it should be a small to medium gain there, and then move on. And then PBR, which we also sent this out as an alert to our subscribers as well. And you can see that we had this wave 4 pattern here, but then when you looked at the DMI, it was suggesting that that wave, the 5-wave pattern there with the wave 4 would become disqualified, which is exactly what happened. And we relabeled to a wave 3 to the upside. And we still have a pretty good looking DMI. Now the ADX is sneaking up there again, still underneath the positive directional indicator, but pretty nice move today. Pretty flat after hours. We're a little bit bumping our head here against some potential resistance. Maybe it needs a bit of rest here. If we look at the 10-day moving average, not that far above it. So it's not like we're severely overbought at this point in time, but this is kind of the do or die spot right here at 12. Can we break above that previous high back in January and run up to 13? It's kind of what we think is going to happen, but let's wait and see how this plays out. Go ahead and see a lot of you are already posting your questions. So that catches us up to date on the previous case study considerations. So what I'd like to do is go ahead and share with you one of our closed trade alerts since last week when we talked. It was on FUBO TV, if you will. If you have a smart TV, you know what we're talking about here. This was in our Impulse portfolio. Go ahead and make this just a bit bigger for you to see there. Long call strategy in our Impulse portfolio. You can see it was a 40 strike call. Now take a look at this. There's a lot to learn from this one, in my opinion. This is our mark-to-market graph. If you haven't been to our website, again, EWOtrader.com, we are 100% transparent. We show every single position, every single day. We have these mark-to-market graphs so you can see where each position is every day. And note that this was down at one point in time over 68%. And then it came back, it bounced a little bit and then came back down, got almost to that level. Now we talk about this a lot and explaining to our subscribers what our methodology is. I know there's a lot of systems out there that are like, oh, if you hit a 50% loss, just take the position off. It's just an automatic exit, no matter what's going on with the pattern. And that doesn't make any sense, especially when you trade long options as we do here. And we do that because we want to make sure that our risk is fixed in every one of our alerts. We don't do anything that requires margin. You're never going to get a margin call. You can't lose more than you paid, all those things. So when you're dealing with long only, you have time decay. It's an issue. Now, Elliott Wave, Fibonacci, our system that we have, our confirming indicators, you can just go back and look at the statistics, and you can see that the history is a positive one. The system works. The percentages of accuracy are there, but it doesn't always happen immediately. Sometimes it takes time. And if you're just going to run out of patience and take the position off because it hits some, magic loss number that has nothing to do with the pattern at the time, well, then you're going to, what I like to call, die a death of 1,000 cuts, because it's just a whole bunch of small losses. Often positions don't move as fast as we would like them to. That's just how the market is. But with some patience here, you can see that turned in from what was at one point in time nearly a 70% loss into a 53+% gain. And the whole position was only a little over a month long. So it's not like you're waiting forever there. So the entry was sent out here on the 23rd. And again, if you're new to our website, you get all this information. As an alert subscriber, we send you what the trade alert is, the position, the number of contracts, a chart that shows the technicals that we were looking at. You can see here, FUBO had based significantly. We're starting to get a little climb back to the upside from significantly oversold conditions out of the CCI, which is another one of our favorite indicators on our website. In our educational area, we have TradeScan. You can look at those, which is basically a detailed explanation of every one of our confirming technical indicators that we use to wrap around Elliott Wave. So our name's Elliott Wave Options. So we're big believers in Elliott Wave. That's the number one, but I don't believe any one technical indicator is the holy grail. You have to have a trading system. Now, if I could only pick one indicator, I'd pick Elliott Wave. But fortunately, we can have supporting indicators that make Elliott Wave even more powerful than it already is, and that's what we do. CCI being one of them. You can see was starting to the upside. We moved back above the 10-day moving average, kind of fainted like we were about to break that major support. It didn't happen, and then we moved to the upside. And you can see as we moved higher, we were running into an area of resistance there at 30. So we had a nice big move to the upside there. They gave us an IV spike in the calls. And considering the fact that, hey, we're likely to calm down a bit, that IV will come back out of the options. When you get a big move, they spike the IV, but when things settle down and it goes sideways for a bit, they pull all that back out. So even though the stock may creep a little bit higher or move just a little bit higher, doesn't necessarily mean that the calls are going to be worth more. Sometimes they can actually be worth less. Always better to take them off on a big spike day than let the big spike go and then have a quiet day the next day. Well, on the quiet day, they've pulled all that volatility out that was there the previous day. So we kind of try to take advantage of that. We'll see how it trades with this 30 level. If it breaks that, well, then it's got some more room. We might take a look at this again for another long position down the road, but it's got to show us that it can break 30 with confirmation before we do that. So that turned out again to be a 53% gain, which at one time was a 68% loss, which really does highlight our system of not just following some arbitrary number on the loss. We follow the charts, we follow the indicators, and if the pattern is still good and the pattern hasn't completely broken down, then we hang in there and we show some patience. And often that patience is rewarded with the pattern doing what it was supposed to do in the first place. So I wanted to share that with you as well. So again, you get an idea of, as an alert subscriber, what comes with every one of the alerts. The impulse strategy is our directional strategy. The volatility strategy is the one that I mentioned, where we have our strangles, which is our unique way of putting on a position that can profit on a breakout of either direction. And we put all the math in our favor. We're finishing up a strangle mastery class where we were talking about the math on delta, gamma, theta, etc., and how the math works in our favor. And I think our subscribers really like that. We put a lot of time and effort into our education, and our subscribers have made some really nice comments about it. And so we appreciate that. And that's on top of the alert service, is the fact that we want to try to give quality education. We want people to learn and be able to do this on their own. That's really the primary reason that Elliott Wave Options exists. All right, so we've covered all those things. Now let's go ahead and see if we can find a case study consideration for tonight, and then we'll get to your questions. Go over here to scanners. By the way, if you are brand new, this technical trading program that you're looking at is called ProfitSource. You can find out more information at ProfitSource.com. People make comments about it all the time because of how clean the charts are, how easy they are to see. I'm a visual learner, and especially when you're trading technical chart patterns, being able to see the pattern, visualize the pattern and where it's going to go is quite important. And so I really like the program as well. So I enjoy hearing comments from others, especially on our YouTube videos, et cetera. Like, what are you using? Well, that's what we're using. And it's, to me, the best Elliott Wave program that exists. I know there's other ones out there. I've tried all that I think exist. I don't want to guarantee that. There may be some out there that I haven't tried, but I've tried a lot of them. And this is my favorite one. This is the most accurate in my opinion. And I'm a bit biased because I'm kind of a purist when it comes to that. Used to be a golf pro and purist from that standpoint as well. I think rough should be a penalty, et cetera, blah, blah, blah. This was programmed from Ralph Nelson Elliott's mathematical formula directly from it. It's not somebody's personal adaptation of it, which a lot of them are that exist out there. So you can come over here to pre-computed scans. And if you happen to be an Elliott Wave option subscriber and have ProfitSource, the people that created ProfitSource, known as the Hub organization based out of Australia, included these searches here that you have. Now, if you own ProfitSource but aren't an Elliott Wave options alert subscriber, you don't get these. But if you are, then you get these additional searches where you can see that the ADX moving up, big believer in the DMI, confirming things, bearish wave 3s or 4s. The ones that say EWO are my personal searches that I created over time, back testing, basically the results of our technical trading system, where we look at our confirming indicators and we apply Elliott Wave to those results and see if we have a pattern that's worthy of creating a trade and sending a trade out to our subscribers. And then we have crossovers between the directional indicators, so you can go through into those things if you choose. I heard a funny noise. Are we still live? Can somebody just make a note that, yeah, you can still hear me and see me and all that?
Well, excuse me. All's well, Rob.
Okay, thanks. Appreciate that. Just sometimes you hear these funny noises and it means that you got kicked offline or whatever. So glad to hear that. All right, thank you. Appreciate that. So let's go ahead and take a look. Now, last week, I think there were 0, if I remember right, impulse stocks. So nothing from my directional based search showed up. Now we've got a lot of strangles on. I'm interested to see what's moving in a directional pattern when we have the market that's gone, no, look how far back we're going. All right, so maybe we're, hedging eyes a little bit lower, but the high back on the 16th of April was, call it 418, and we're roughly at 420 now. So we've gone nowhere since mid-April, 2 months. The market has done nothing, absolutely nothing. And, we've had a few nice alerts here and there with some of our momentum search results, et cetera, stocks that are still moving, even with the market going like this. But imagine what's going to happen when the market breaks out and all those strangles move. That's going to be exciting. So when the market moves, all those strangles are going to move too. And then we're going to have all kinds of things to look at from a profit standpoint. So again, if you're thinking about subscribing, you want to get in now before the market actually breaks out. Pardon me, perfect opportunity. So back here, let's take a look at those. Clicked too many times. Sorry about that. Give me 1 sec. Just admire that nice profit that we made on that alert there while I bring program back up. So we also give you both the percentage return and the dollar amount. Some people don't really even care about the percentage return. They're just more interested in what were the dollars and cents. The percentage return is a bit of a measuring stick, if nothing else. We'll bring the SPY back up here, and then we'll bring the pre-computed results. I'm anxious really to see what, as I mentioned a second ago, what stocks are actually moving to the upside with the market consolidating as it is. And then you see Logitech. Well, we had a good trade on Logitech. We made money off of that, and now it's still on the search. So let's take a look. Oh, well, so we caught this first move and got out before this consolidation here. Well, now it's moved again, but that's awful vertical. And if you know anything about me and you've watched any of my videos, I don't like it when things go vertical, because what goes straight up often comes right straight back down. And I think we did really well on this. And it's not within me to chase that kind of move. Maybe it goes to 150 vertically. Okay, I'm going to miss that move because I've done that too many times in my life where you think, oh, wow, look at the strength of that move. It's going straight up. It's really strong. That isn't what it means. I use another analogy here. It's like a rocket going up. And when the engines end, if you're not into space, you're going to turn around and come falling straight back down. The model rockets, et cetera. It goes up, then you turn around and fall straight back down. That's what happens when you have vertical moves. This is the kind of move that I like, this 45-degree stuff. Hang around with that a bit longer, but when it starts to go more vertical, I get nervous. And, it consolidated as it should have from that vertical move, and then it's taken off again. Well, you don't ever get upset with the profit. We did really well on this, and, that's the way it goes. But I can't chase this kind of a move right here. It still says it's in a wave 3, but you can see the separation here from where it is and the 10-day moving average. Let me get this line out of here. So there's the 10-day moving average. There's where we are. So separation again. We had a little consolidation. It's taken off again, but that's the way it goes sometimes. Maybe it runs to this target. That's why I was saying 150. Maybe it just goes vertically right there. It could do that. Things can stay overbought or oversold for a time period. It's just no fun to be on the other side when that corrective move comes back to the downside. So I don't want to chase that. If somebody else does, then clearly more power to you and wish you the very best. Hope that it works out for you. But I can't do it. Just too many years of experience and seeing what happens when that doesn't go well to change that. So Fizz, yeah, I love that symbol, right? Fizz for national beverage. And if we look at the DMI, you can see that it's trying. The ADX is curling up. I would have much preferred this ADX to have come down. You've heard me say this. If you watch the videos, you're probably tired of hearing me say it, but I much prefer when the ADX comes below 20 before we turn back to the upside. It didn't do that. That's not a deal killer. That doesn't mean that it's an automatic disqualification from our analysis. It's just a preference that I have. In Elliott Wave, we talk a lot about rules versus guidelines. So it's kind of a guideline that I would prefer to see the ADX drop below 20 before it moves back up. But that's not a rule, so it's not a deal killer. But it's not in really an Elliott Wave pattern at this point in time. Look at the 10-day moving average. We do have a 1030 cross, so that's good. The 10-day crossing the 30. That fuchsia colored line is the 30-day moving average. The lime green is the 10. So that's a positive. That looks good. The money flow's positive, but it's moving lower. That's not so bad because so is the stock. I would actually look at this more of a, it kind of looks like a descending triangle, doesn't it? With those lower highs. So I think we can do better than Fizz. So let's click and move on to the next one. You can see NVO, Novo, it's an ADR, traded this one in the past. We'll take a look and see what the options look like. Look at that money flow. Woo! Money moving in there to see what the DMI looks like. And so we had a nice run, pulled back a bit. Now it's trying to run again. So just a little bit of a pullback there with a potential target around 88. We're trading at 82. So that's not a whole lot of room left to go. But let's just take a look and see how liquid this is with the options and see if maybe there's something we might want to do with this. NVO. It's a symbol. So, wow, it's got a lot of options. Spreads here, I'm going to put my magnifier on here for you, and then you'll be able to see them bigger. The spreads are a little wide, aren't they? So September, August, 73 days away is a possibility as well. 3 to 4 points wide, which isn't so bad when you're up around $20, $25, but when you're down at the 30 delta is 45 cents wide, and the 22 deltas below that they're way too wide. The 40 delta is a little high. That's at the money. We don't want to trade that one. Even that one has 25 cents. So there is a little bit of width here. Now, one of the things that I talk about, a width of the spread, I mean, one of the things I mention a lot is, especially over this past year or so, is that you'll see when the market closes, the spreads widen. And a lot of that has to do with these volatile stocks that sometimes catch the market makers. A lot of trading activity is occurring after hours now. Big percentage of the daily move occurs before the market actually opens. That has not been the case for as long as I can remember, but it has been the case over the past year or so. Survey was done like somewhere near 90% of the daily moves in the market has been occurring after hours. People always joke. I mean, I post videos at 3 o'clock in the morning and stuff. They're like, do you ever sleep? Lately, the market action has been at night, not during the actual trading day. That's when all the stuff has been going on. So you watch and see what's going on. So I'm fascinated. If the market's trading, I'm fascinated and interested to watch it. I'm using that for some of our long-term subscribers. They used to get on me for using the word fascinating. Apparently, I used it often without realizing it. So I've tried to avoid that word. So there you go. There's a flashback there for you. But my point here is that often, once the market does open, these spreads tighten back up. After hours, it protects the market makers. They're on the other side of the trade. They can widen the spread. It gives them more flexibility if the stock were to make a significant move in after hours action. That's why that occurs. So I wouldn't say that we give up on this yet. In fact, I'm actually going to make a note on this. You kind of have a fondness for stuff that you've had success with in the past. And this is one of those. So I'm going to make a note of that. NVO to the upside, target price there at 88. It's not a big move. I would like to see about a 10% move. So 82 to 88 is only 6 points. So it's not quite 10%, but it sure sits up and looks pretty nice. So we're going to keep an eye on that one. Let's see what else we have. Google. We've had, this is my number one stock. If you've been around with us for a while, look at that DMI. Woo. Well, if you've been around a while, you've heard me say this before. This is, for me personally, my number one stock. And what I mean by that is I've had more option trades on Google in my 25 years of trading options than any other stock symbol. It just loves Elliott Wave. And I think it's because, well, I'm pretty confident it's because it's a very liquid stock. The more liquid an issue is, the more accurate Elliott Wave is. Elliott Wave's job is to analyze the behavior of the masses. That's what Ralph Nelson Elliott said he was trying to do. And so the more liquidity you have in any issue, the more accurate the Elliott Wave patterns are going to be. And so, Google, we all know it's liquid and can trade. Look at that zigzag pattern right there as well. So here we have this long consolidation here, and then a break higher. Boom, 50% dead on the nose. See, we've only hit the 61.8% extension. Look at that, a doji right there. Tiny bit away from the 10-day moving average. Maybe it wants to rest for a day or two. Here's the recent high. So maybe a rest day, coming back down with that doji, letting the 10-day moving average catch up, testing that high from back on April 28th. All makes sense. But it sure looks like Google wants to run to that 2666 level, 2,666. That's a lot of sixes. That's not good, is it? But the chart sure looks good. So let's make a note of that one too. look at the DMI. I mean, they don't set up much better than that. There's my ADX. I think we can say it barely got below it. Yeah, just on this tick here on the 3rd, we just got below 20, starting back. Good separation between the two directional indicators. The ADX movement up between the two. Boy, that looks good. That really looks good. CCI is not overbought. This is an indicator that if you do go through TradeScan, you'll learn that past targets are key. History of it, the scale is not true for every individual stock. Every stock has its own overbought, oversold scenarios. So you just look at where it has been historically on that individual stock. This looks really, really good. So I'm actually even going to put a star by Google. Subscribers are likely going to see an alert come out on that. So we're doing really well here. We got a couple good ones. Here's Intuit. Wow. Look at that. Well, we're getting some awfully good results here. You know, the NVO, I thought, oh yeah, we're going to do that one. These next two have been even better. So we've got 460 up to 490 is the targeted move. Again, about as supportive of a setup with the DMI as you could ask for. Maybe a tick higher in the ADX than there was in Google. But for those of you that are purists on the DMI, you'll read that the ADX should be at 25 and higher. I like it at 20. I think that allows you to catch more of the move. But with 20 or 25, you still have, in this case, 30 points to the upside on Intuit. There's your stop, if you will, the 420 level. You can make your jokes about that. But there's where the wave 4 forecast would be as well. That ties in. So if Intuit pulls back, it's a good chance 420 is going to be its level of support there. Previous wave 5 high, that's the forecast wave 4 if the wave 4 were to start. But even if the wave 3 moves up and that changes, for those of you that are new, when you see this 4 and 5 on the screen, it does not mean the wave 4 has started and that's where it's going to go. And then we go to the wave 5. It means that if, because right now the labeled wave is 3, the 4 is speculation, it has not been labeled. The software has not said we're in a wave 4. The software is saying if we move into a wave 4, that's where the wave 4 corrective target price would be. If the wave 3 goes higher, then this 4 and 5 projection change based on where the wave 3 is. But as far as now, that would certainly make a lot of sense. So if it does pull back in a short time, then moving back to 420 makes sense. But it looks like that wants to go to, and if it's going to get to 490, don't you think it's going to 500? You hear me talk about the like the tractor beam effect from Star Trek, where you get that close to a big round number like that, it just like draws it to it. I think it'll do that with 500. If we get anywhere near 490, I think we see 500. So there's 3 really good ones. Kind of giving you guys bonuses in this. We used to just do one. We need to go back to just making it one, and then there's Logitech again, which again is too vertical for me. So that's 3 pretty good ones there for you to follow along. I do think we have enough strangles for when the market breaks out. We've got that covered with our past couple of weeks. So it's all right to try directional. One, obviously, if the market breaks to the downside, then those may struggle a bit. But even though the majority of stocks follow the market, doesn't mean every single one does. So we'll see how that plays out, see what the futures are. At the moment, not a whole lot going on in after hours. So kind of same thing that happened throughout the trading day today. So maybe we're set up for another quiet day tomorrow. Just have to wait and see. All right, so let me take a few questions here, and then we will wrap things up for the evening. Let's try Riot. with the breakout to the downside, I mean, this is blockchain, right? So it's not necessarily an exact crypto. So, but it's obviously in that space as well. Hasn't really broken down the way Bitcoin has the past couple of trading sessions, but it has broken below 30 and needs to get back above that level rather quickly. Last time we got down here, it went up, got to 30, doji, drifted back down. Look at the moving averages. We're right on the 10-day moving average. So at this point, it could just be resting here and ready to run. It'll run into a little bit of resistance at 40 when it takes off, but that's not major. Just maybe it bumps its head there for a couple of trading days. So if you're long this thing, I don't see any reason not to give it that opportunity. I mean, right here is the support. You're not that far away from it. So the least path of resistance would be higher rather than lower at this point in time. Baron asks, been seeing a lot of large triangles in the market, this consolidation phase. Based on your historical experience, have you ever seen these triangles resolve collectively, i.e. they all break together? Yeah, there hasn't been, in fairness, in my recollection, where the market corrects and then the market consolidates. So we have impulses, corrections, and consolidations in the market. That's why Elliott Wave works. That's what Elliott Wave is looking for. Those three things, right? What the market does. And the market does consolidate from time to time. What's surprised me is, considering the fact that the VIX has been slightly elevated, but the market hasn't moved. Those two don't usually jive like that. You would expect to see a market that's gone nowhere for 2 months, other than a couple little blips here, have the VIX back down around 12 or 10, 9 or so where it was before, to go this sideways. But we've got the VIX at 17, and yet the market still isn't moving. And so I go back to my analogy of, I just think, man, that pressure is building. I think that VIX wants to blow, and the market wants to make a significant move. The VIX will go higher if the market makes a significant move higher. I know everybody's familiar with, usually if the market goes up, the VIX goes down, and vice versa. But if you do get a really, volatile move to the upside in the market, the VIX can go up with an upward move. I think we could see that now. But to answer your question, Baron, I've seen scenarios where the market's consolidated and there's been a lot of triangles. And then, yeah, when the market breaks, they all go at once. It's like, the grand finale of fireworks, right? On July 4th, we have July 4th not too far away. That's exactly what happens. The market breaks out and they all go boom at the same time. And that's a lot of fun when you have a number of them on, they're all moving. So the nature of this consolidation, not exactly what you see a lot, but seeing a lot of triangles in a consolidating market, completely normal. And yeah, when the market breaks, they tend to all go together. So that's a lot of fun. OCGN for Mike. So Mike, let's take a look at OCGN. See what that looks like. Pretty nice triangle. Where was the ADX there? Getting down there. So it got down to about 13, which is what I like. And pretty nice triangle formation here. Now, the issue is that you had a breakout day yesterday, which looked great, but it didn't confirm today. So let's see what happened here with volume. Above average volume yesterday. You don't necessarily want one of those big spikes, because that tends to, you get a blow off top type of a move when you get a big breakout on huge volume and then it pulls back. So you didn't have that. You just had a little bit above average volume, and yet it still didn't confirm. So you're going to have to reset things. We got a doji here. Maybe it tries again tomorrow, but you need that back-to-back day. You need a breakout and a follow-through day. But, it's not the greatest triangle in the fact that it didn't touch the two trend lines a lot, more on the higher lows than the lower highs, but still was a triangle, still broke out yesterday, just didn't confirm today. And we'll see if it can turn and move from there. Now, looking at the DMI is setting up, right? Now, remember that ADX has to break 20, separation between the two directional indicators. ADX has to break above the negative directional indicator for the DMI signal to be qualified. It's not there yet. Looks like it wants to get there, but sometimes the DMI can give you head fakes as well. But decent looking on the breakout yesterday. See how the market trades that doji on the chart tomorrow. Hopefully you've got a strangle on that and you don't really care which way it goes. Blue. Wow. It's got a bit of a triangle, but it has done nothing in a while. It's trying to break now. ADX did get awfully low, got all the way down to 10. So that's pretty low. It's trying to sneak up there. It's kind of a little bit of that bubbling effect that I talk about with lava. And you can see that we have a pretty nice symmetrical triangle here. Just hasn't been doing much after that big move to the downside, but that's not that unusual when you have a big drop like that. But it's trying to regather itself and move back to the upside. Breakout day yesterday, a bit of follow through today, so that's good. If you can see that ADX continue to move up, looks like that one could really run to the upside. And as you noted, there is a pretty big gap here that needs to get filled all the way back up to 45. So when it takes off and decides to go, which maybe it's doing with that follow through day today, then yeah, you could have a run up to 45. Yeah, sure as BNTX did break out. I saw that after we talked about it last week, but then it came back down to fill the gap. So I had a vertical move, and then the gap up there, got away from the 10-day moving average. So you can see if we just walk it back yesterday, way far away from the 10-day moving average. So if you miss this one, because it had already broken out, it's giving you a second opportunity. So what it's doing is it's come back, it's filled that gap, and it tested the breakout and closed back above the top of where the upper trend line was in the ascending triangle. So I think if you didn't this one, you could get back in. If you wanted to go long, you could. You still have a supportive DMI, although it doesn't look as good as it did a couple days ago, right? With the ADX curling down and that negative directional indicator gaining up. But your point of reference here is where the top of this triangle is. So 200, basically, it can't go below that. If it breaks below that, then everything changes. Let's see what the volume did. Yeah, it's above average volume on the move down today. You didn't really want that. It was solid the previous 2 days. That's exactly what you want. So we're testing the breakout immediately. Here we go again with that. And I can't remember, asking about triangles breaking out. I can't remember this many patterns that immediately the breakout gets retraced. Again, it makes more sense with the fact the market's consolidating, but still, it's a lot of them that are doing that. AHT, we have this for our subscribers as well, and had a pretty nice move today. Then there was a tweet, Jim Cramer. I wonder if he'll get the backlash that Elon gets, but he tweeted that this could be another one of those Reddit meme stocks. And it's up another $1 after hours based on Jim Cramer's tweet. So it's trading above 7. So if it holds where it's trading right now, it's going to open somewhere up around here. Maybe not quite that high, but somewhere about there. So another vertical move to the upside. And that's going to probably get that ADX up in an area where we're starting to think maybe it's a bit overbought. I know there's some speculation that this could go a lot higher. We'll see how it plays out. Still a lot of time between now and when the market opens tomorrow, but it definitely had a vertical after hours move when Cramer sent that tweet out. So yeah, that one looks pretty good at this point in time. Andrew is still managing the GE Strangle. We'll see what GE looks like now. Yeah, yeah, nice breakout, but it couldn't follow through, huh? Dang, that's a shame. You got to root for that company. I think I mentioned last time we talked about it that both my parents at one time worked for GE as civilian contractors to the space shuttle program. But moving with a nice breakout, it's come back down. Looking at the 10-day moving average, at this point, it could just be simply recovering that overbought condition that it was in from the 10-day moving average. GE, historically is not a volatile stock. It doesn't move a lot. Problem is now it's kind of traded itself back below a little bit of resistance there at 14. Obviously, there was resistance up here as well at that previous high from the 9th of March. But I mean, it still looks pretty good. And, if it holds here, it could easily turn and move back to the upside. The DMI is still supportive. Actually, even looks better than it did a couple of days ago. Still looks supportive. And this just could be that was a really big move for GE and it needed to take a break, breathe, and consolidate it. Scott, wow. These are the kind of comments that we like to hear. Just a quick thanks. I was down 7,000 before signing up in 1 month. By following your advice, the entire list of loss has been wiped out. Well, great to hear that. Thanks for sharing that, Scott. That's awesome to hear. Charlie talking about love finding support. Is it time to buy calls? I don't think so yet. It's finding support here because this is very heavily owned by institutions, right? A lot of them own Southwest. A lot of them own all the airlines. And everybody can look and see this same chart. And I'm sure, pardon me, you're seeing it too, where you can see that boom, 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 boom. All these times that it's coming down and hitting this level of support right here around 58. If it breaks that, it could easily see 52 within a couple trading days, like a couple of these type of bars right here from the 4th and 5th of March. We could be right back down there in a heartbeat. So I know Warren Buffett is in the airlines as well, but we got to give it a chance to see what happens with that doji today. We've got a perfect doji today. If it can bounce back up above 60 in a meaningful way, then you might look to say, okay, that was just a test of support on that downward breakout, and we are going to run higher. I just think we got to see it break above 60 first. So Emilio, we did already look at AHT. I think there's going to be some happy people tomorrow. Sounds like several of you asking about that one. Again, long time between now and when the market opens. Tomorrow, Craig, you got a bunch there. I'll pick a couple out here. You can see that Coupa Software is COUP. It's in a wave 5 to the downside, getting pretty near its target though. So that wave 4 was a 38% correction right there, which means the wave 5 should be 61.8 and it's at 55 on today's move. We've got a doji there. Maybe that's just because of CM. We're a tiny bit oversold, not significantly, but we're approaching an area of support. You could see that right there. It looks like 220 wants to hold as well, even though it closed just below that today. So we could test down to that 61.8% level, which would get us closer to 200 and then maybe turn back around. But if you're long the stock or wanting to go long, you want it back above 220. That's the key, is it needs to get back above 220. Tesla we'll look at Thursday night. Let's look at Oracle. I haven't looked at that one in a while. Wow, that's a nice move. I hope you're long this one, Craig. That's a pretty nice wave 3 move to the upside there. And the DMI is still supportive. It doesn't look like it's done. Nice breakout. Look at that triangle right there. Yeah, see the ADX never got down. You've heard me say this before, that the ADX does not have to be down around 13 for a triangle to break out. There's a perfect example. We just prefer that because usually when the ADX is lower, then you're closer to the breakout point. When the ADX is higher, sometimes you can go through that process of forming larger triangles, and it takes a long time for the breakout. Didn't work that way this time on Oracle. Really nice move to the upside there. And again, the DMI looks supportive of that continuing. Its target price is around 92. We're at 85. The only question would be, does it need a little rest first? We're slightly overbought from the 10-day moving average. Maybe it needs to go sideways just a touch, but sure looks like that one wants to hit that wave 5 target there around 92, 93. That's great looking. Apple we'll look at Thursday night as well. PAAS. So got another silver stock. I think we looked at SLV last week. You can see there's a breakdown today to the downside. Both gold and silver had a little bit of a move lower, and wish this was just a bit better formed. I would love to be able to put a strangle here. It's not bad. Kind of changed things a bit with these moves here. They came back up, but if you ignore that, then you've got a great looking symmetrical triangle. But you see how these bars kind of mess that up, and they turn it more into all right, now we're in a trading range here where we have supported 29, and then we have resistance up in this area around 35, and we're smack in the middle of that right now. So, easy to Monday morning quarterback here. Hindsight's 2020, whatever. Pick your favorite cliche, but going back a ways, that would have been a great at the money butterfly setup where we just have all these flats going back and forth and going sideways. But right now we're just in no man's land. We're right in the middle of everything. We have a negative 1030 cross, the 10-day moving average crossing below the 30. So maybe we need to go down and test that 29 level again. Then we could take a look at it at that point in time. We'll look at NEO, even though we're going to look at that one Thursday night as well. You can see that we've moved here to the upside right there around 45 resistance area. If it can break above that, then we're back to 60. I think we're kind of the same thing we talked about a couple of nights ago. So the NEO chart's pretty easy to analyze. Support at 35, resistance at 45. So that's the key, these 10 points right here. If it can break above 45, it's going to take off and run. If it breaks below 35, it's coming back down to 20. So, what happens in between here is going to be the key. That's going to figure it out. Winston wants to look at ARCT. Arcturus Therapeutics. And it's trying to sneak a move to the upside. Positive directional indicator just crossed above the negative. The ADX is kind of wanting to say, hey, maybe there's something going on here. We could be in early stages. This looks a lot like the FUBO chart, where it's consolidated for a very long time. You're going to have to get above 40 here. There's resistance there. It found support. It created support here at 30. So 30's got a lot of support. Needs to break above the 40 level. If it does, then we could see that one come up and fill this gap all the way right here at 60. That could very easily happen right there. Look at one or two more. Brian asks, who do you trade in the after hours? I don't trade any stocks. If I'm going to do any trading in the after hours, it's just going to be on the E-mini futures. I know that things are changing and the stocks are getting more and more liquid, and you can do that, but I really don't trade any stocks after hours. Valicia Win. WEN. Okay, we'll take a look at Wendy's. You heard this too. They were talking about this today on the financial networks. Another meme stock they're trying to push this one up too, as anybody wanted to ask about this. I'm just not the guy to ask about these kind of things. You know, we've gotten fortunate. We've had a few of these where the chart pattern put us in them. You know, the AHT came off the momentum search and stuff, and so that looks good. And you know, now it's getting caught up in that. We've been fortunate with a couple of other ones that happened to, BB, and you know, just a few of those. But you know, when you see these vertical moves, I've got no idea when that's going to end. I just have no clue how far that could go. There's no rhyme or reason to these vertical moves like this. And from a technical standpoint, it just blows out the charts. You can see this massive volume spike here in this. And they made the shorts cover today with opening it way up here at 27. So I just want to reiterate this. Please be careful trading these stocks. This is not people sending out memes on Twitter and the other services that communicate through Reddit, etc. The retail public does not have the power to cause this kind of a move. This is, you have nefarious institutions that are following along with that. They're getting into the fray. They're going to get in and out. You hear the pump and dump, you know, it's kind of a cliche theme, but that's what they do. They get in and they stick it to the retail trader. They don't care. They're the ones that have the power to actually create this. So when they join hands with that, yeah, they can create these moves. How far is it going to go? I have no idea. So I'm just not the guy to try to forecast how something like that can continue. When I look at it, it's way, way, way overbought. And at some point, now it could be, you know, another one of those bars later. But you've heard me caution on these because you've seen them too. They go straight up, they come straight back down. And it will close that gap with a 10-day moving average. But I can't tell you if that's tomorrow, the next day, next week. I don't know when it's going to happen. So just please be careful. Good luck. Wish everybody well. I hope everybody makes money trading, and just don't get greedy. Be cautious. Coin, we hadn't looked at this one in a while. You know, we had this little triangle right from the open. At some point in time, this is going to run. We talked about this when you have these IPO days. Normally, you get a closing print where the high was. It's moved to the downside. You know, Coinbase, Riot Blockchain, just anything in that crypto world is having issues right now. I don't think it'll last. I think cryptos are here to stay. It's going to be survival of the fittest. There'll be lots of consolidations. A lot of them will go out of business. The strongest will survive and thrive. And, you know, we'll see where things are 5 years from now. It could be completely different than what the space looks like now. If it can hold 220, then it's got a chance to turn and start back to the upside, just wherever it wants to base. But the future, this could be a long-term buy and hold thing. That's not normally my thing, but I think that this one could be. If you're looking for something that, you know, has potential to move and is probably going to do well in the long term, I think this one will. All right, one more, CSLT. And I do want to mention, while we're looking at this, is this another one of those? I'm not sure about Castlight Health. I don't know if this is the main, you know, Clover move today. Is this in that same space? Got a nice ascending triangle that's trying to break out of. It's not in a current Elliott Wave pattern. The best thing I could look at is the DMI, which looks really good. I mean, from the DMI standpoint, it looks supportive of this continuing to move to the upside. I think this was a lot easier to trade than Wendy's is, because there's your support at 2. As long as it stays above 2, you can stay, you know, strong and long on this one, because that's going to be your support area. It was resistance. It's broken above it. long as it stays above 2, you're solid. If it breaks below 2, then you're going to probably come down here to 175. If that doesn't hold, then you're 150. So you got some stepping stones here. But the key is for the aggressive move is stay long as it stays above $2. Many of you have written in. We will not be doing tomorrow night the practical application for the Strangle Mastery. Have had a death in the family, and I'll be traveling out of town tomorrow to go to the funeral for our subscribers. I will be doing remotely our insiders meeting on Thursday night, but there's no way I can do our practical application. So we've rescheduled that for the following Wednesday. And for all of you that have written in messages of kindness and support, it's very much appreciated. Thank you so much. And I hope you have a wonderful week.